Hello, and welcome to Realtors Talk. I'm joined by Margaret and Sue Sotiriou of HomeGuard Funding, a mortgage broking company. And recently, we've had some major changes in the mortgage funding market, so we're going to talk a little bit about that today. Hello, Sue.
Hi,
welcome
how
to the
are
show.
you? Good.
Pretty good.
Thanks for having me.
Margaret,
I
got
have
any
a
questions?
I do. Okay, so my main question is this. I'm very well aware, and we have been for years, that a stress test, as we're calling it, when you put in 20% or less, everybody has to qualify. But
That's
now they're saying that everyone has to qualify. What does that mean exactly, so that we all understand it?
So now with the new rules that are coming in January 1st, 2018, everybody will now have to qualify under the new stress test. Whereas before, anybody that put a deposit down for less than 20% had to qualify on the benchmark. And that rate currently right now is 4.99. Going forward in 2018, if you're putting more than 20% down on a down payment on a property, you will have to qualify with the greater of the benchmark, which is 4.99, or the negotiated rate, which could be as low as 2.99, and then you have to add a 2% increase or percentage point to qualify at that new rate. So that means that the higher of is only qualifying you in the event that rates do increase in the near future or over time. Mm-hmm. If at the end of the day, you actually do get your negotiated rate, so the lower rate of 2.99. It's just a qualifying test that they need to make sure that you are able to manage your mortgage payments comfortably going forward in the future in the event of increased mortgage rates.
Well, I look at that as a positive, because the one thing I've been talking about, and that is with my buyers, especially first-time buyers, I want them to be able to qualify when that 2-year or 3-year period comes up for renewal, that they can stay in their home because they've qualified for a little higher rate. And I'm looking at it and I'm thinking, I think that's terrific.
Couldn't agree more. It really is important for everybody to feel comfortable in a rising rate market and not have to worry about the stress of having to make their mortgage payments. First-time home buyers, this market coming forward might give them the opportunity to get themselves into a home, which I'd like to see. I mean, first-time home buyers are usually your young and upcoming couples, individuals that are obviously new in their job, and they have the potential to earn more income. So things are just going to allow them to get into the market, make more money going forward to make their mortgage payments. And I think it's a good thing.
This is upon us, though, guys. It's like January 1st.
It's fast approaching.
Right?
It really is. And anybody that's in a contract at the moment, whether it's a seller or a buyer that's currently got a firm offer of purchase, a firm sale, those contracts will still be honored going forward, even if they close later in February of 2018. They are not going to have to go through the stress test of reapplying for your mortgage or their mortgages. So that's good. Between now and then, if you have any need for refinancing, or you are looking to purchase a home and you want to pre-qualify yourself, now's the time to do it under these guidelines.
Right, yeah.
The old guidelines now before the new ones take effect. Just in the event that it does affect you greatly in terms of your purchasing power.
Right. We've been through a few of these, right? So when the banks change the rules, or when the government changed the bank's rules, either one, there's an adjustment period. And it's fair to say that, well, January, well, it's a slower time of year for real estate, this is going to really kick up a little bit more dust, if you will, for people to try and consider. The one thing I'm worried about, and it's not a big concern really, is just that first-time buyer may choose to wait for a couple of months as if the market is going to go down just because of this. It may not. But what we do know for sure, and it's kind of exciting, is the banks right now, they're spending a lot of time likely trying to adjust in this period. Vendors could have mortgages, hold mortgages. They can do a lot with that kind of money.
Right.
Maybe could we spend a bit of time on that? So you know all about this. You're with a funding mortgage company, and that allows people to come in. I think you used the word mix. So could you explain how this works? And
So MICs are your mortgage investment corporations, where either you can, as an investor, actually invest funds in a MIC.
Cool.
Our company, generally, they look at doing private mortgages, and that's also a MIC-based product where you're borrowing private money to fund your purchase. And although those rates tend to be a little higher, they're great for investors that have the extra cash that they've received from maybe the sale of their home, and they're looking at downsizing and not buying that bigger home again, and using those proceeds to fund other mortgages. They are looking at funding the individual that do not qualify under the new stress test rules.
Right. So,
So
there's
at
a
the
lot
end-
of benefit here.
At the
right?
end of the day, there's really going to be a mortgage for everybody.
Yeah.
I mean, we adapt. We've
Yeah.
always adapted.
On that side will work, but I'm thinking for sellers right now. So sellers, if they want to have their home sold, there's two areas that I would be thinking, and one is that they can help be part of the funding themselves.
So you're
by
looking
what's-
at a mortgage, a vendor take-back mortgage.
vendor take back mortgage. Yeah.
So a vendor take-back mortgage is again a product that would not be regulated by these new rules, because you as the homeowner are basically saying that you're willing to hold the mortgage for that potential purchaser until such time that they can qualify on their own to pay out the remaining balance owing on the mortgage.
Yeah, and the other side, of course, is maybe you just have equity in your house, and it's a great way of investing.
Absolutely.
Right, and you can make money without having to worry about tenants.
So again, I mean, if you're looking at taking out the equity in your home, you might want to consider doing that now, sooner than later, under these rules before December 31st.
Really? Oh, yeah, that's right.
Have that available to you, so that in the event that we need to fund somebody, then we can come knocking at your door, present the application to you, and at the end of the day, it's your decision as an investor if you want to incur the risk in the investment.
Yeah.
And obviously, with that kind of investing, you're looking at a better rate of return than what you're going to get at the banks.
And what is that rate of
Yeah.
return?
It depends. Again, it's all risk associated, but you're looking at a minimum of 8%,
Well, that's pretty
as
good.
high as 14%.
Wow.
So
14%, likely a different borrower for sure.
Absolutely.
In that case, right?
Yes, yeah.
But that's a nice way of doing it, and so that you can either do it from the equity of your house. Maybe you just have a fat bank account that you want to do it with. But it's
Exactly.
a great way of investing. I've held a couple of second mortgages, and I did very well by them.
And usually those types of mortgages are short term. We're looking at a 1-year term. So 1 to 2 years at the very most. And then we look for solutions to get them out of that situation, because we don't want the borrower to be paying those high interest rates. We want to get them back into a bank world where they're paying the lower rate.
Yeah, and generally speaking, they're not long term, are they? They're
Not at
usually
all.
about a year or two, something like
Yes,
that. There's
yeah.
all different things
Yeah.
that they offer. Wow. Well, that would, it's really a nice way. If a homeowner is trying to sell their house, they're downsizing, they're going to have an amount of equity in their home.
right.
That in this case, maybe they can assist a buyer that's got very good credentials, but this stress test right now is stressing them out. So that could be a solution for that, right? Where buyers are concerned, we do see it as something there's a little bit of a negative thing to it, but most of it really is positive, because when you qualify, you're qualifying under a more stringent guideline. Right?
Exactly. Yes. Yes. I
Okay.
agree. Yeah.
Very good. Got any more questions?
I'm good.
Wow, what a great show. Lots of information this time around, eh? Sue, so how does somebody get in touch with you?
Fantastic. Thank you for asking. Yes, Sue at homeguardfunding.com is my email address. That would be the most simplest way to get in touch with me.
Beautiful, beautiful.
Thank you.
Okay, what a great show.
Oh, it was fabulous. Thank you so much, Sue.
Yeah.
And everyone, please like us, share, and subscribe, and you will see our videos as they come out. Thank you.